The common man watches the ticker tape. He sees the price advancing rapidly. He believes the straight line of ascent will continue indefinitely. That is the first great error of speculation. Speculators fixate entirely on dollars. They forget the critical importance of the calendar. They measure movement only by the vertical scale. Price measures the high and the low. It shows the extent of the rally or the decline. Time measures the horizontal progression. It determines how long the move must run. The market is defined by both dimensions. It is not enough for a stock to be cheap. A low price means little if the time element is still running against it. A security may have reached its absolute low point. It will not begin the anticipated rally until the necessary time has elapsed. Time is the final arbiter of movement. It governs the moment of reversal. The average speculator waits for the price to break a previous high. He ignores the natural cycles that govern the move. He forgets that time stops action. It is a common observation that stocks often stall at certain points. They refuse to advance further despite strong volume. The reason is simple. They have run out of time for that particular cycle. The market movement requires perfect harmony. Speculators must learn to look for the square. They must calculate when price and time align perfectly. When the price level equals the time period, a powerful change is due. This alignment marks the point of true equilibrium. It is the vibration law applied directly to the tape. The greatest profits come only when the speculator recognizes this law. He must wait for the perfect balance. He must know when time runs out for the current trend. The straight line expectation is a delusion. All movement follows a curve. That curve is defined by the necessary passage of time. Before we continue and get to the main point, I'd like to thank you for the interaction that drives this content. If possible, take a second to subscribe, like the video if you enjoy it, and leave a comment. This helps the video reach more people, especially your subscriptions, and guarantees you won't miss the next breakdown. The market offers no charity. Most speculators lose money quickly. They operate purely on hope. Hope is not a reliable system. Success demands strict adherence to specific rules. Consider the foundational work of William Delbert Gann. His book sets the standard for disciplined trading. Truth of the stock tape. Gann emphasizes capital preservation above all else. He details 21 immutable rules for successful operation. These rules cover margin requirements, pyramid selling, and mandatory stop losses. He explains time cycles. He shows how to forecast future price points using historical data. The link to this book is in the description below video. The market acts according to a fixed law. It is not chaos. All price movement is simply the result of vibration. Every commodity has a distinct rate of vibration. The speculator must determine the specific tone of the stock. Movement is not measured vertically but geometrically. Price advances or declines along specific angles. These angles define the true rate of the market's progress. They show the relationship between distance traveled and time consumed. The 45-degree angle is the line of perfect balance. This is known as the 1-by-1 rate. When price holds this line, time and price are in complete equilibrium. The trend is strong and reliable. When the market is exceptionally vigorous, it climbs the 2-by-1 angle. Price is advancing twice as fast as the passage of time. This shows immediate, powerful demand. Such rates cannot be sustained indefinitely. A weaker market falls back to the 1-by-2 angle. Time is passing quickly, but the price is moving slowly. This indicates inherent weakness in the current direction. The trend is vulnerable to immediate reversal. The speculator must always watch for the crossing of these lines. When price breaks an angle, it shifts its geometric rate. The market is seeking a new level of balance. All major movements require the squaring of price and time. The elapsed time must eventually equal the price range covered. This is the law of vibration applied to the calendar. When the square is satisfied, the old vibration ceases. The energy of the previous trend is exhausted. A major change in direction is inevitable at that point. The market only offers the greatest opportunity when this geometric balance is achieved. The speculator waits patiently until time confirms the price movement. He trades only on the demonstrated rate of advance. The 45-degree angle is the most crucial line. It is known as the 1-by-1 angle. It shows 1 unit of price moving for 1 unit of time. This is the ideal rate of ascent or descent. When the market climbs above this angle, it moves too fast. The advance is unsustainable. The speculator watches for the price to return to the median line. If price falls below the 1-by-1, the trend is weak. It shows a lack of buying energy. The geometric law demands a correction back to the angle. The entire movement of the market is based on the law of vibration. Price and time are merely expressions of this universal law. The greatest turning points occur when the square is completed. This includes squaring the range, squaring the high, or squaring the low. These cardinal points define the market's destiny. They represent the points where time has caught up to price. The true speculator never fights this law. He understands the power of the cycle. He waits for the vibration to change before taking a position. He never fights the geometric law. The average speculator ignores the most vital factor. He believes price alone tells the story. He watches the tape for confirmation of his hope. This is a profound mistake. Price is merely the effect. Time is the cause. Time rules all markets. It is the geometric law of the universe. The foolish man buys a stock running high. He sees the momentum. He fails to count the days elapsed since the last major turning point. He ignores the time cycle. The market has a predetermined date for its change in trend. When that date arrives, the vibration shifts. The current movement must end. The speculator who holds past the critical time pays a heavy penalty. He is fighting the eternal law of periodicity. He believes the price movement will continue forever. He forgets that action and reaction are equal. He overlooks the square. When price has traveled a certain distance, time must catch up. If a stock moves 10 points in 10 days, the square is near completion. The reversal is imminent. To ignore this synchronization is to court disaster. The market does not care for the speculator's opinion. It only obeys the rhythm of the calendar. The fool buys on Monday, certain of a rise by Friday. He does not know Friday was the pre-calculated limit. The market turns sharply. It catches him exposed and unprepared. He is shaken out of his position. His loss is the consequence of fighting time. He tried to force the market past its natural limit. The true operator knows when the square is due. He waits for the hour when the vibration must change. He never fights the geometric law. He understands that time and price must balance. Until they do, the position remains dangerous. The market always settles its accounts. It collects the capital of those who ignore the great cycle. They are destroyed by their own ignorance of natural law. The successful operator views time as a circle. All market movement begins and ends in a geometric cycle. The measure of this cycle is fixed and universal. It is 360 degrees. The market respects the calendar divisions of this circle. Time itself provides the greatest resistance level. The speculator must watch for the major division points. These points are mathematically precise and predictable. The circle is first divided into 4 quarters. The 90-day mark is always critical for timing. It represents the first quarter of the annual cycle's vibration. The angle of the price move often completes its initial segment near this point. The second crucial division is 180 degrees. This marks the halfway point of the cycle. It is often a point of great reversal or violent acceleration. Price movement attempts to balance the time elapsed. When the price has moved 180 points and 180 days have passed, the square is complete. This balance brings the change in trend. The ignorant trader fights this natural law. The wise operator waits for the equilibrium. The full rotation is 360 degrees. This rotation brings the completion of the major trend. Prices often return to the starting point after 360 days have fully passed. The cycle then begins its renewal. The operator translates price movement into angular geometry. Every dollar change can be seen as a specific angle on the chart. The timing of the reversal is determined by the angle of the elapsed time. When the price level and the time angle square up, the position is sound. The market is not random. It follows the exact laws of vibration and rotation. The key is knowing how to measure the degrees. The market cannot escape its dependence on natural law. Time measures distance just as price measures distance. They must eventually meet and balance. The larger movements are measured by years instead of days. The 60-year cycle holds immense power over human activity. It is the greatest time factor known to the successful speculator. Half of this cycle, 30 years, also marks a crucial turning point. The market repeats itself because human nature and mass psychology remain constant. Time simply defines the exact period of the repetition. The measurement of time must be accurate down to the degree. A swing of 10 points in 10 weeks carries a different implication than a 10-point swing in 10 months. The angle of the elapsed time determines the true strength of the movement. The market does not operate by chance. It follows fixed, immutable laws. These laws govern all movement and momentum. The successful speculator seeks the point of equilibrium. This is where price has squared with elapsed time. When 30 points have been consumed in 30 days, a crucial balance is struck. The market has fulfilled its immediate mathematical requirement. The law of vibration dictates the path of every stock. It is the speculator's job to define that vibration precisely. The various angles measure the true velocity of the trend. The 45-degree line is the most important support or resistance. It signifies a rise of 1 unit of price for 1 unit of time. The market must hold above this critical angle to sustain its advance. If the price breaks the angle, the trend has been broken. This requires immense mental discipline. The speculator must wait for the exact moment of reversal or confirmation. He must not anticipate the squaring of the factors. Anticipation is the costliest error a man can make in the market. The amateur buys because he thinks the price should move. The expert waits until the calculation proves the change is mandatory. The work is a synthesis of geometry and arithmetic. Price, time, and range must all be measured together on the chart. When all these factors align, the signal is clear. Time has measured the exact distance price can travel. The speculator acts upon the evidence alone. He knows the market will obey the laws of mathematics. It has no other choice. The true speculator understands that time is the final factor. Time determines the change in trend. It is the master key that unlocks the market's secrets.